It's a company called MiX Telematics, which started on its JSE career in November 2007, and this morning it's come out with a good set of results. We're going to be speaking to the CEO, and that's Stefan Joselowitz, in just a moment, I hope. Is Stefan in the studio with us? Okay, these are some of the highlights from the MiX Telematics results today, and I must say that in these rather troubled times, these make your heart sing when you see them. You see revenue increasing 14%, breaking the 1 billion mark for the first time for MiX Telematics, so that's quite a milestone. Earnings per share up 44%, great numbers there. Adjusted headline earnings per share 33% higher to just below 19 cents per share. Annuity revenue increased by 14.7%. During tough times, annuity revenue so important to a company, almost displaying defensive qualities, which I quite like, and a dividend declared of 8 cents per share, despite a drawdown on cash or cash reserves, a 33% increase in dividend. As I said, in the studio in Johannesburg is the CEO, and that's Stefan Joselowitz. Stefan, congratulations on these numbers. You must be happy.
Yes, thank you, Lindsay. Very happy, thanks.
I was looking at the commentary. It's quite unusual commentary, actually. Lots of exclamation marks. It looks as though it's been written by yourself rather than some of these PR companies who make things terribly serious. I don't know where you want to start. Do you want to start segmentally, or would you prefer to start geographically?
Well, you know, the picture is a geographic picture, so, you know, I guess the standout item for us is the turnaround in our US business, which we really took up as when we acquired it was a troubled business, and we spent the last 3 years working hard to turn it around, and it's had really a fantastic year, over 200% growth at the top line. So, and it's really contributed to the bottom line as well, almost $2 million at the EBITDA level. So, all in all, a fantastic turnaround for that business. Moving across to Europe, our business there performed ahead of plan. A lot of restructuring we did in that business to make it more resilient. So, we got rid of a non-core business that we had there, and we disposed of that ahead of plan, and we're very pleased with that. And all in all, our African business showed some reasonable subscriber growth, although it was flat at the revenue line on the consumer side of our business. We saw very good growth at both the revenue and subscriber levels in our fleet business in Africa, so very pleased with that. In the Middle East, very turbulent year, so a lot of political upheavals, making it difficult for us to deliver on our services for some of the contracts, but our team did a fantastic job manoeuvring their way through that, so we're very pleased with that. In Australia, we were ideally positioned to take advantage of the resource boom there, and we did that well, so pleased with that.
When you look at the business itself, which is obviously very much linked to logistics, the amount of goods and services being transported, the amount of passenger cars there are in the market, how direct a link is there between the world economy and GDP growth and your business?
Well, I guess like most businesses, economic growth certainly makes life easier for us. We are focused tactically in areas such as oil and gas, mining, exploration that have had good growth through and good profit generation even through difficult times. So I guess that's helped us. But obviously we're concerned about some of the economies, particularly Europe at the moment. I guess we just have to focus on doing what we're doing, and hopefully we'll get all of our business to fire at the same time.
You've got a great geographic spread, as you just pointed out. South African company that's really at the forefront of the market leadership in this particular field across a number of geographies. But where do you see the growth coming now? You talk about Africa, the number of subscribers sort of being flat. But does that, when you say that, is that South Africa, or is that beyond our borders as well?
Well, actually, we were flat at the revenue line, but did see growth in South Africa at the subscriber line. So, and that was on the consumer side of our business. We have launched a new product which plays in the low-cost, high-volume space of the market, which we typically haven't played in before. So, we think that's going to drive big growth for us in the years going forward. But we have seen fantastic growth in Africa in our fleet business. So, we're expecting that to continue. We recently opened an office in Uganda, and that's to get close to some of our multinational customers that operate in that region. and we expect to see that the growth trend on our fleet business internationally, which is where we focus our fleet activities, will continue going forward.
Just very finally, Stefan, you say in your notes here, and I'm just quoting you here, you say, as usual, and again at the risk of boring long-term investors, you can't bore people with these sort of numbers, Stefan, but anyway, as you say, I tend to stick to my perennial favourites when highlighting a few financial indicators. And number one, annuity revenue. This remains one of our key performance measures, and it grew to 577 million. That really is a big number, and again, must be very comforting to investors.
Yeah, and it's comforting to me and clearly to our board as well. So it is the number one focus of our business, Lindsay. We're focused on growing our annuity business. Our strategy is to leverage our profitable cash generative businesses into growing our global annuity base, and we put all of our efforts into that, and it is paying off. And as you pointed out earlier, it is it's defensive when economies are tough, and it gives you a great growth a great base for growth when you can grow subscribers, and often those profits, if you're managing your costs correctly, flow straight to the bottom line. So we're really excited about that.